What's up, guys? Welcome to another live session. Today is July 4th, 2020, and we're back at again. Happy Independence Day to those that are celebrating, also known as 4th of July. We in Canada had our day, Canada Day, on Wednesday. So this week was pretty short. If you guys know by now, NFP is usually on the first Friday of every month. So technically today, but since it's a Independence Day and it's a bank holiday, it was moved to yesterday. So bit of a odd anomaly of a trading week in terms of the schedule and structure of it, but that's just how it is. 2020 has just been a weird year overall. So anyways, in this session we'll be going over the trades we took, and believe me, this week was pretty uneventful just because of the structure. But we'll focus more on insight for next week, as we have a five-day full trading week. I don't think there's any more holidays except for Labor Day later in September. So before we start, our Discord is the place to be. So if you're tired of me talking about announcements, you can simply read them on our Discord. The link to sign up is in the description of the video. It's free to join. You can see pip counts, company updates, all that good stuff. Gain reviews, people making profits, all that beautiful stuff, as well as free insights. So you can get the free live session that's sent after it's recorded here, and also daily technicals and fundamental write-ups as well. So definitely a place to be, and also a place to get help or questions answered about Forex or our services. So this week, officially, we only had one trade called. That was gold, and let's take a look at it. So we actually had three trades called, correcting me. But one trade that we've closed out of, which is gold. We took the long on the 30th, which was the Monday. And you can see we had high hopes of 1800. I think everyone in the Forex community was waiting for 1800 to get hit. And we'll pull up to that, and you see that we went to 1789, just a tad bit away from 1790. So here we have it. So here was our entry. We got a quick push up to TP1. I got people to get re-enter because I knew that this is more of a long-term play. And so we got TP1 once again and almost TP2. And so after that, we were finally out of the trade with stops at break even. And I'm looking to go long again. I told members yesterday we just need to close above 1780. You can see since yesterday's NFP results, gold hasn't really done much. Most of the majors haven't done much. So for these two trades that I called, pound dollar and NZD, this is in some drawdown. This almost went to TP1. Now it's at entry or in some profit. And so in an hour or two, I'll let you guys know if we should just close it out. We will close it out. I don't normally have you guys hold trades over the weekend. Me personally, I have done that. I've done that with the Aussie dollar long from last week. So that's the setup we wanted, and then we had tons of setups that were just pending. So if we look at our alerts, you can see, here's the setups we entered. Here's US oil. We had a long idea. It whipped up but never closed above, so we couldn't enter it. USD Rand was a potential idea as well, and this was during Canada Day. You can see price closed below our key level. But none of these candles are the bearish candle we want. And after a few, a decent move down to the support, price rebounded. So it's definitely a setup for next week. Also, Aussie CAD, very similar. Again, we wanted to go short after a break of this level. We wicked, but we never closed below, so that never warranted entry. And then earlier in the week, we gave a long for GU, pound CAD, and pound yen. Now, as far as I know, a few of our members, I think PZ Late, you got the pound dollar long. Pound yen, the candles were clean enough to go long, so you can see we have no bullish hammer until here. And so when it eats into our take profit zone, we usually skip on the trade. We tend to like to have the bullish closure right after the key level. So for example here. And also we have, let's see, I'm going to pull that up. We have a lot of setups. Again, Monday was Monday, right? Mondays is very slow, very, very slow. Tuesday we had our entry for gold. And then Wednesday we had Canada Day, so no one was in office. Neither was I. We had no live session. And then came Thursday, NFP, and so we got entry into our majors. And then it's been consolidated. So it's been definitely not an ideal week to trade, but we did the best we can. So pound NZD, this was the long idea from last week. Now we are looking to go short again. Obviously today's Friday and it's Independence Day. The markets are dead, completely zero volatility. Fridays are usually dead, but since yesterday evening the markets have just been dead. So it's probably gonna be just an uneventful Friday unless a huge order comes across or some fundamental comes up, but I doubt it. So we had a few setups on the table. Here's pound CAD that we wanted to go long for, and it shot up perfectly to where we wanted it to. But we were looking to enter on the 4-hour candle, but this 4-hour candle went so far into our profit zone that our R2R was decimated. Right, there's no point of entering. So it was that kind of week. Depending on if you got gold or depending if you got NZD or GU, you're either ending the week into profit or at break even. At the worst, maybe a negative 8 pip loss, whatever that may be. But let's take a look at GU first of all. So GU, here's a consolidation, right? We had a perfect technical analysis from yesterday. We have a 4-hour resistance zone here. We have a trend line break on the 1-hour time frame. And you can see we went pretty close to TP1. We actually were off by 3 pips. And then price pulled back. And this is consolidating at this level. So I'm going to be holding this trade through the weekend. I don't mind it because, again, the stop loss is pretty tight. And, we are trading with the trend. We're in a downtrend. And I don't think this is a point in time where we'll reverse, especially after the U.S. Economy printed such great results. So you can see if you pan out, consecutive lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. If you inspect this really carefully, you'll see that the high we made yesterday has not cleared the previous high from last week. So the downtrend is still intact. Even if we did, I do think it's short is the way to go. The pound is also dealing with Brexit and Corona as well. So that's that. I'm gonna be holding it. Right now we are in 8 pips drawdown, so not bad. And then you can see NZD. So NZD was a bit annoying, but the stop loss for this trade is 27 pips, so it's not the end of the world if we do get stopped out. Again, 27 pips stop loss. It's the reason why I call these trades, right? But again, we had a short idea. Since then, the dollar has just NZD has some strength to it. I'm not sure why. The RBA and stuff is next week, but it may just be the dollar is sleeping because of the events going on, in addition to Independence Day. So, I'll probably let this candle close out. Again, it's 27 pips. I'm not going to be too worried about it. I might hold it because, this short trade is definitely based on the higher time frames. If you look at the higher time frames, you see that we'll either run into resistance here, which we have, or the resistance up here at 0.65900. And so for me, this is a value investing trade. I told you guys we need to start taking more swings because of the choppiness of the markets. And so for me, I have no problem extending my stop loss from 27 pips to here to make it a 70 pip stop loss. I have no problem because this option is more likely than not for price to make its way back up here throughout Independence Day, through the weekend when the dollar's asleep, and then New York Open, we get that sell-off. So I did this with Aussie dollar last week where we got stopped out, or the signal got stopped out, but I didn't get stopped out because I moved my stop loss. And thank God I didn't, because Aussie went up to the upside like originally planned. So again, you have to be adaptive, and so for me, a 70 pip stop loss with correct risk management is nothing. So that's NU. Right now we're at negative 20 pips. So if you want, you can close out now. Again, I'll report the negative 20 pips on the pip count, right? No harm in that. So by all means, feel free to do that. I think one of our members, I think Jay, he got out of GU in profit. He didn't wait for TP1. He got out in profit, and he's celebrating Independence Day, so it makes sense. So again, these are just guidelines. It's not really financial advice. This is what I do, and then if you want to follow along or take pieces and bits from here and there, then that's what all it's about. So NZD USD, I do think it's a short. Maybe just until next week's DRBA. Even though weekly time frame, you'll see. Move all this mess out the way. You can see, we're just pulling back. Maybe we test this resistance once more before we go lower, but pull back. You'll see we're in a downtrend, right? We are in a classic downtrend. And so, right, you have all these lower highs, lower lows, lower highs. And so, as long as we stay below this previous high, I'm not going to be looking for longs for NZD dollar, especially with the dollar coming close to fully reopening and easing its monetary policy. I'm thinking short. So that is that, and anything can happen with this 4-hour candle. Can definitely juke back down. So if we were in deep drawdown, I'd be sure it'd be a tough to close up, but nothing we can't handle, and nothing that good risk management can handle. So yeah, that was a week, but next week definitely will be great. It's not really too news filled, other than a few monetary policy stuff for Aussie, NZD, and I think Japan, but we won't have Canada Day or her Independence Day. We won't have NFP either. So you go with the punches, you roll with them, and then you take some of, you give back some of your own. So a pair of recommendations. I'm pretty sure a lot of our members are going to be. Oh, Mark was still here. A lot of our members are celebrating, but Euro, Pound, NZD, perfect. And people on YouTube, I will get to you as well. Let's get to members. So Pound NZD, we wanted to short this. So again, we remove our old short idea, and if you pull back to the daily, you'll see a significant support has been breached. Right, significant support. Dating back to March 2019, we have these huge long wicks in this level, and then here we are in June 2019, we had a rally from here, and then we come back again in August 2019, use as support. If you look now, the daily candle is bearish. I obviously want it to close a bit more bearish than this. For us, it's the wicks. You can see the wick to the bottom is technically a bit longer than the wick to the top. We generally want to see the wick to the bottom be non-existent, so a candle like this would be perfect. Like this one right here, where there's no wick to the bottom or virtually none, and the long to the top, usually have a nice sell-off movement when you have those candles. So this is the daily, so a lot can happen by the end of the day. But this is definitely a good step to take, because the last time we broke this support, we went all the way down here. We crashed and burned all the way down here, and actually went significantly lower. So that's definitely a possibility. It just depends how far we go. And also, this is Pound NZD, so this will go wherever NZD goes. So this may be a tricky trade to take. We'll see how it plays out. As most members will be out of NZD anyways. So here's a mock-up trade idea. So 2.63. I am looking short Monday. I don't trade Sundays, but Monday. If the daily looks good, we will enter the trade. Okay. So the 4-hour or the daily, whichever one comes first, we'll go short, and we'll get this trade. And honestly, I want to just set and forget for these next few months, or at least quarter. So this would be one of those trades. Obviously, clear downtrend. We may have a deep retrace like this, which might fool people into thinking it's a reversal. So we'll adjust our stop loss accordingly. But for now, it's fine. Again, this is a mock-up idea. We just want to buy it for next week, and we're bearish on Euro Pound NZD. Now, since Euro NZD and Pound NZD are correlated almost 1-to-1, oh, here it is. So here's Euro NZD. We had a potential idea for this as well, and it's just become activated. But we don't enter trades on Friday, but it's all good. So you can see Euro NZD. We've come up to this last low we made back in June, and all we need on Monday is for price to break this low. break this level, and we should be good. Right now, price is resting on it, kind of stalling on it, so that's good for us. And that level is 1.71990. That is 1.71990. Is a significant. It's the last significant 4-hour low we made. If we break it, that should open up the floodgates all the way down and show you the level we found. Here's a level, and you can see this long wick. This long wick to this level is the reason why we're targeting it. Also, because in the past, when we do have a sell-off, we do tend to flirt with this region, use as resistance, use as support here, and then finally launch off. So this is the level we want, and again, you can see the daily time frame. 1, 2, 3, 4. 4 straight days of sells for this pair, and so there may be a retrace on Sunday, but Monday, once we break this level, we are good, and then R2R will be fantastic. So we're bullish on NZD, at least against the miners. I'm not sure about the dollar, but definitely this pair. And you can see the R2R. I think this is good. 2.28. We'll have it halfway in between this and this line right here. And so there you have it. So this will be also a setup on the watch for next week, and I'm gonna be looking to enter on Monday morning session. Okay, so that is the 2 setups that we were looking to enter. Entries were just a bit messed up, but we should get a clean entry next week for sure. USD let's take a look at this. So earlier in the week, we had a long idea, and if you look at the candle, this is not a candle we like to enter long on. For longs, we like a bullish hammer where the wick to the bottom is significantly longer than the wick to the top. You can see here the opposite is true. The wick to the top is longer than the wick to the bottom, and therefore we don't enter the trade. So we had a few setups, we had a handful of setups that we wanted to enter this week, but price action just didn't let it happen. And you can see since that pullback, USD yen has consolidated since July 1st. It hasn't done much, even on NFP. It moved up a bit and then came back down. So a lot of consolidation. Again, we're in a very economically still time. There's so many fundamentals affecting things that you don't know why something happened or what's doing what and what could lead to this move. So it's just a mess. But you can even see, if you go to daily effects, you can read this nice article. Dollar as a safe haven or a source of global instability. So the dollar has been one of the gold standard safe havens, but is it now a risky asset or what? A lot of investors are asking that. So we also have an election coming up in November. Debates start in September, so it's just going to get a lot worse. Hopefully, this Corona stuff passes by, and that's one less thing we have to worry about. But USD yen, I'm thinking long. Let me actually remove all these levels and give you a nice daily analysis. So in June we made this huge high, okay, and then we pulled back to this support. Right, we pulled back to the support, we launched up again, and we're running into some resistance here on the daily. You can see these wicks, all this resistance here. Right, nice clean level. And so based off this, I'd probably go for short. We also have some support. Let's extend this up. You'll see these longer wicks to the bottom. And then identify that. So here we have it. So we have 2 ranges, right? So we have this range right here, right? From here up to here, we have multiple instances of this movement right here, and then from here to here. Okay, that's the first range. We're in that range, and we have shorted. Price has shorted from there and come down to the bottom of that range. So that's not a viable option for us, right? But we also have this range right here. Right, when price breaks this level, it goes down to here. Price comes back to this level, goes down to here. Breaks, goes down to here. breaks, it goes halfway. Again, it's still a lot of pips. Breaks, it goes 60% of the way. That's a lot of pips. Comes back again, goes all the way down. So this is probably the best setup for USD yen. But we do need to get we do need price to actually break this level, right? And let's see how the 4-hour looks. Alright, so on the 4-hour, you can see in the past, whenever we get that inverted hammer, like this candle right here. So this is a nice inverted hammer, virtually no wicks at the top and bottom. We have a sell-off. When we have these bearish hammers, we get faked out, so that's an important thing to notice. So we're looking for those inverted hammers to take the short, okay? And if you even want, you can even draw this trend line, which I think is a very nice tool, to be honest. So we do have a trend line break, obviously, right? And then you can see this is a hope trade setup right here. So we have a trend line break, so price is trending, and then once news came in, right, July 1st, once NFP became imminent, we had a consolidation period. So I think this is a good setup where you'll have consolidation period, and then you will finally get a breakdown. We'll get a breakdown, right, or a break up. But it's not the most lucrative option, right? Unless we break this resistance at 108.000. So at 108, if we break that 108 resistance, then we can take longs targeting the July high up here, right? That's fine. But as long as we're in this kind of range, we'll have to trade the range. And so we're going to wait for the consolidation in the box. So ideally break from the bottom, and so we can take that huge long down to 106.000, so around 150 pips away. Okay, so that's what I have for USD yen. I'm thinking short until we either break above 108, 100. So here you have it, Marco. Something like this for the short. 2.89, and this stop loss is conservative because technically we can make the stop loss just above this consolidation zone, and then you have a 3.91 R2R. So that's definitely a viable setup. I think that's going to be the highest probable setup, but we'll see. I think on Monday morning we'll know for sure whether investors really bought into Trump's 4.8 million jobs added job report. Otherwise, they think it's a bunch of baloney. So we'll see. Again, based on the current data, we should be looking at a bullish dollar, at least more bullish than the past weeks, but it could all change. So USD and short. All right, let me look at people on YouTube. Did not forget about you guys. All right, so here we have NZD yen, Euro CAD, CAD yen, and gold. Perfect. So NZD yen first. Any other pair recommendations or questions, send them through on Discord or YouTube, and I'll give them a look. I know it's Independence Day. Most of you are probably on the grill or in your backyard or at a beach, but you'll probably be watching this on the weekend. So, yeah. So NZD, it's definitely got some buying power. You can see it in dollar, you can see it in yen now. And so for the yen, there is definitely a possibility to go long, if and only if we clear this wick point that we identified yesterday. Right, so you can see these two long wicks that were made back in June at this 70.500 level. Now, if we clear it, we will be taking longs. Again, for me, I'm going to be sticking with NZD dollar. We'll see how it goes. I don't mind taking two opposite trades because it's technically be a hedge. It will technically be a hedge for me, so it's not bad. But again, we just need NZD yen to close above 7,500, and if it does, we take a long. Like in the past we had just launched up to this high, and we'll go all the way to the June high. So there's a chance to maybe long, USD yen, but it doesn't look as likely as a short. And in terms of NZD yen, the long is more of a higher probable setup in my opinion. Right? You can see it based on the price action. we have a lot more bullish momentum here, and we're actually trending up in terms of price action. Where USDN, it's all consolidated. So here's the long idea, right? Our stop loss is just a bit below halfway between this line and this line, which is our two ranges. Then we have a 2.91 potential R2R setup, so that is NZDN. It's in the 4-hour time frame as well. All right, next up we have, I believe it was EuroCAD. Our EuroCAD consolidating. We gave a trade idea within this consolidation box, and we were actually waiting for price to tap the top portion of this box early in the week. Actually, last week you can see, it didn't go all the way up here. We wanted to short from a rejection here, just to be safe, but we never just got that. Instead, price went back to this intraday range, and then just pushed back up. So EuroCAD, let me actually move this current setup and see what's up. And here is the daily range for EuroCAD. So we'll have to wait for price action to either come back down to that support to the bottom of the range, and 1 second, guys. So yeah, we can either wait price to come back to the bottom of the range right here and then take a long, or make it pull back up here, create like a triple top, and then go short. It's just a riskier option to wait for price to pull back up, because it could instead pull back up and go all the way to the upside. So we'll have to make sure we get a clear-cut rejection here, maybe on the 4-hour time frame, and then take the short. But you can see since April 3rd, right? This is April 3rd. Since April 3rd to now, which is July 4th, price has been stuck in this box. That is unbelievable. That is unbelievable. So, April, May, June, 3 months. 3 months price has been stuck within these two levels. That's consolidation for you, and that's what a lot of fundamentals at once tends to do. That's the choppiness, but that's what I have for EuroCAD, to be honest. So I'd wait for price to pull back up here. I think it will. Otherwise, we could do the third option, which is actually wait for this intraday level to get broken, and then just take it down to this the bottom of the range. So there's 3 options. Monday, again, today's just a weird day in general. Sunday, I don't trade it just because a lot of weird stuff can happen. If you've traded Sunday, you'd know. And so we have a few days to kind of let price action find itself. Next week we'll know whether we're going to be taking a long or short or any of those trades, depending on price action. So that is EuroCAD. CAD yen. So this is a setup we had. It's pending. CAD yen, CAD yen. And here we go. So it's very similar, consolidating, and we wanted to get an entry for 4-hour bearish closure here to go short. I never really liked it, so I just avoided plotting the signal. But if you pull back to the daily, you'll see why we want to go short. So you can understand why here we wanted to go short, because price was inching lower. But this week price has pulled back, and so we'll have to remove this potential idea for now. CAD yen. I mean, obviously it's a sharp pullback from this high we made back in June. It's just hard to say long right now. It's risky. Price action is not doing us any favors by being this confusing, but I believe the only time we'll probably go long is if we break this kind of resistance we created. You can see these this wick here and then this candle rejection here at 79.6666. 79.666. If we break down the 4-hour time frame, then we do have that huge upside target. Again, NZD yen, we have a similar setup where we're looking to go long, and we're targeting a June high. So, we may have NZD and CAD yen longs next week. That could be a potential correlation. So. Something like this, 4.3 R2R, but we will have to be pretty patient with this setup because right now price could, instead of going up here, just print a bearish candle down and continue melting, which is fine because if that does happen, we can wait for price action to come back down here, and then wait for one of these rejections and take the long. Right, we have 1, 2, 3, 4, 5 rejections on this level, and then we can take a nice R2R log back up to the top side. So that is CAD yen. Mixed bias right now, but definitely the higher time frames, the short is still the best option in my opinion. So yeah, we should give more concrete tips, but again, mixed price action is never the best to trade, especially when markets are ranging or doing a sharp move one way, then another move the other way. It's very hard to gauge, and so sometimes you just have to wait for the markets to start trending again, start a new trend. So either we're waiting for CAD yen to start a new bull rally up here, or continue in the consolidation box and take that sort of. Alright, any other lasting questions, let me know. Gold, okay. So high hopes for gold, 1800. We still think it's on the table. We just need to clear this one level. That is all. 1788. I mean 1780. That's the level we need to clear. That's the level we actually entered on after price closed above. We entered at 1782. The level we want to close above is 1780. So since NFP price action has just stalled here, and so we could have a sell off, but I'm bullish on gold. So I'm gonna be waiting for price to close above 1780 on the 4-hour time frame, and ideally it has to be a bullish candle. So like a bullish hammer or just a big body bullish engulfing candle, which you can take up to 1800. So that's my thoughts for gold. As a value investor, you just want to get the price point, which is 1800. As a trader, you want to make sure you get a good R2R and risk management is in place with a good stop loss. So that is all the trades we discussed this week. Let me see if I'm forgetting any. Euro Aussie, let's see if we did it for Euro Aussie. Nope, that was last week. Yeah, so I think, yeah, even US oil, so I'm still bullish. You can see we're still in an uptrend. That's why we wanted to go long, but we never got that clear-cut closure, and that's why our entry criteria is so strict. Because if we don't get it, then that usually means price went the opposite direction in which we predicted, and that's good, because the more broader and generalized your entry criteria is, the less accurate you will be, right? In my personal MyFX book, I'm at around 79 to 82% accuracy of my trades, just because I'm following a very strict method. And to be honest, I've been kind of bending it a bit because of how slow the markets have been. So I've been kind of forcing setups, but again, discipline, that's all it's about. So otherwise, any last questions? Yep, preparing for Monday. Hopefully you guys had a decent week. For me, mostly it was just I had Aussie dollar. That was a nice small win. Gold was a nice small win. I'm gonna keep GU and NU and see how that goes. So yeah, not a bad week, but it's we've had, I think I've been here for what, 14 months. We've had I think all 14 months have been really great. So maybe we're due for a slow month. Slow doesn't mean unprofitable; it just means slow. So that is that. So again, quickly, let me just recap how you can get involved in a Forex trading room. We actually adjusted our pricing structure a bit, so and I hinted about this, and I even said it a few times already, but we have changed our pricing structure. So if you actually go to our website, you'll actually see both. So you'll go here and you'll see, get grandfathered in by July 2020 before new pricing takes effect. So here's our new pricing structure. Here we have, the apprentice, which is the trading room and all the signals, right? Which is what we have right now, as well as the smart money education. So if you look at the old pricing structure, you'll see the trading room is by itself is $97 a month. But with the smart money stuff, it's $147. So a lot of content here. Now, if you want to subscribe on a quarterly basis, which is actually cheaper, you actually get a lot more. So you get special signals from gold specialists and oil specialists. And then if you want to commit for the yearly, which is actually cheaper. So if you go by month per month, it's actually cheaper to go quarterly or actually yearly. And if you go on the yearly level, you get these things as well. So one-on-one with the mentor, all that jazz. So that's the new pricing structure. All of our old members are going to be grandfathered in. For new members, now's a chance to get in and get all this content. We do have a 50% off your first month available for the apprentice, just like we do always. And to get the first 50% off, all you have to do is use the coupon code FIRST50, and your first month will be half this price, right? So it will be $73.50. That's not bad, right? And so you get all this content, and if you like it, you can always upgrade to one of these packages as well. If you have any questions, email support@forexfriends.com, and they'll help you out. Quick reminder, join our Discord. It's free to join. You can chat with me and other traders as well. And I hope you guys have a great weekend. Next week, we have a 5-day trading week. I can't wait. No real major events unless World War III happens. So we should have a good trading week nonetheless. And let's keep it going. So I hope you guys enjoy Independence Day. Spend some time with your family. It's summer after all. Enjoy the weather. Don't be cooked up in front of the charts. And we'll be back on Monday ready for another free live session. So peace. I'll see you guys on Monday.